So what I'm going to do, first off, thank you for having me. It's definitely my honor to get the chance. I know you guys, even though you're stuck at home, many fun things to do at home. But I'm going to take this opportunity to share a little bit of the update. Really is definitely one of the biggest story of our lifetime. And I think whatever we do today will definitely change a lot of the way that we work, we live, we invest for many, many years to come. So what I'm going to do I wanted to sort of cover as many of your questions as possible. But this is actually an update at least on, I don't think, this is a super sophisticated audience. I don't think you need me to tell you about coronavirus, but what I'm going to focus on is some of the impact, particularly economic and technology impact for our industry as a result of Corona. And then I'm going to focus on some specific trends and industry that as a result of this, because there's so many changes, what we are focusing on and paying attention in terms of investing. And then I'm going to open up for Q&A. I know there are many, many founders on this call. So particularly, I absolutely wanted to help and listen, anything that we can do to help in terms of what you need answers. But we've been doing many, many research for the last few weeks. Really want to understand the impact for our industry, regardless for startup, for investment, but just overall as a market. I don't know how many of you, but certainly certain days I'm currently in my San Francisco apartment for, I don't know for how many days and weeks, and you absolutely feel like the world is falling apart. And even though it feels like that, but not only that, but it's really mainly around a physical world. As we speak, the brick and mortar reality as we know it is shutting down. My day-to-day is really almost 12 hours on Zoom. And in the morning, I try to go for a run, but you definitely don't see anything is open anymore in San Francisco. So in a matter of days, I don't know if you guys heard the news this week. Last week, there's 6.6 million in the US have claimed unemployment insurance. And literally at a matter of days, many businesses shut down their physical office. My entire team is working from home. Restaurants shut down, schools shut down, airline pretty much drafting plans to shut down. All the kids are studying at home, and I basically get all my food and supply delivered every few days. So it's definitely a really, really tough time. So combined is about 9.6 million to have claimed unemployment insurance. According to the US Private Sector Job Quality Index, predictably about 37 million jobs may be vulnerable for layoff in the coming 8 weeks or so. So it's definitely a really, really tough time. And then on top of that, on March 23rd, Wall Street suffered the world's single days decline since 1987 and down to almost 18,000 points. So from Wall Street, and many of you know, I was born and raised in Hong Kong, and my family in Beijing to Hong Kong to Guangzhou, they all feel the shock. So it's not just a Wall Street, but there's also to Main Street. Regardless, you're investors, you're founders, CEOs, or you're part of a company, all of us are nervous and anxious. So meanwhile, right now it feels like US is basically where China is 3 months ago, and New York very, very soon, and probably already have achieved #1 in terms of the cases of coronavirus. And this is a screenshot that I got from New York Times 6 days ago, but I have not looked at today's number, but probably doesn't look good. At the same time, I think that the decision we usually may take years, now is literally being executed, and we change our mind, and a lot of new decision is being made within hours. And even though the world is shutting down, but it's still running somehow with all of us being at home. And the good thing compared to, I guess, the Spanish flu, which many the economists and financial analysts been comparing, it's a very, very different world today, right? If you think about it, over 110 million the US household now have fixed broadband, meaning, pretty much all of us, most of the population are work from home ready to go. And in addition to that, now 80% of the US population have a smartphone. So even though we're stuck at home, but our mind is not stuck, and the world is still running, but it's just right from our own home. So as this situation continues to evolve, I think a lot of things will change. Not only now, not just us being stuck from home. As our host earlier mentioned, right, this is not, hosting virtual conference and conversation is not a temporary thing. From now on, we will do a lot more of this. And not just now, but the next 2, 5, 10 years. And all these choices that we make today is not only for the way we work, the way we live, it's going to be impacting healthcare, our culture, just everything around us is going to change starting now. But I do think that a lot of the shift is, in some way, is, even though temporary, I think our prediction is the economy probably wouldn't get back to normal until at least Q4 or early next year. But slowly, a lot of things will change. It's going to be more digital, more location independence. We may not even need to go physically to work, be able to get things done. Will be automated, will be distributed, will be live, recorded, just like what we're doing now. And also with security and hopefully more trust between all of us. So I know I just gave about 5 minutes of really gloom and doom of updates, but in the next sort of half of my deck, I wanted to be a little bit more lighthearted. And many of you know I like watching old movies. And one of my favorite movies, Back to the Future. And I really, really love this one line. The doc actually say, where we're going, we don't need roads. And really, literally are jumping ahead because right now we have no choice. So what I'm going to do is actually go over a few particular trend from an investment point of view that we are paying a lot of attention to. And if any of you are working on this, I definitely would love to hear more about it. But the way that we're thinking about it is we think that many of our customers and founders will from now on expect to buy, consume, and being supported not just sitting at our home, right? We are running our business at home, but many of our consumer, regardless as enterprise or consumer, are all actually expected while they're sitting at home. They will be able to buy, they will be able to get support, they will be able to consume your product and services. So if you think about it, today, the fastest growing company in terms of communication is Zoom. As I checked a few days ago, they're now worth over 14 billion. So which means the good thing is the internet access is great. Communication, just like what we're communicating now, is through Zoom. We're doing okay, even though it's not perfect. But can you imagine there will be a whole school of new enterprise software that will be architected for us, for work productivities. We think that there will be new type of CRM. We think that there will be new type of ERP. Many of these traditional, Salesforce, SAP obviously been running for a long time, but I think that there are some real needs, or for when all of us think about, there's still, I know some companies that are financial services who have to handle the PII information are still sitting at home at their office, even though they're in San Francisco, but that got to change because it's not safe for them. So how about maybe privacy preserving database, new collaboration, new communication infrastructure, new video infrastructure. We think that there's going to be new needs for open source, open data, cybersecurity. These are all the things that we are excited about, even though we could be, you and I sitting at home like Homer, barely touching a computer. But there are a lot of enterprise software infrastructure that we think absolutely are needed now. but not just now. Maybe now we can sort of hack our way in, but there will be more and more of these as coming soon. Next, we think that everything will be automated. Whether we think that can be automated, will be automated. And for things that, sort of the robot serving in a restaurant, it seems kind of weird, but you know what, at time like this, I don't know about you, I don't want to touch any cash if I don't have to. So in times like this, we want things to be delivered whenever, wherever we want, with as little human involvement as possible. Not starting with food, but maybe liquor, particularly California. I think the drinking rate have increased 40–50%. Toiletry, I still don't get the whole toilet paper thing, but it is what it is. Definitely medical supplies, our clothes, our shoes, and we expect it to be fast, to be best quality, to be secure, trackable, and reasonably price. So hopefully you don't jack up the price just because in time it needs. But it's not only for us or for our family, but also for our loved one or friends that's far away. I want to be able to gift them all these things in a way that is trusted. One of my friends, Maggie, is working on her new company that we've been actually trying to source masks to the elderly. And it's just been so hard because a lot of people are hoarding unnecessarily. And even like for the people who are really in need are not able to get it. So how do we actually solve that? Next item is new education, the way that we learn. I know many of my friends with kids are going crazy right now. It's going to sound bad as much as you love a person. If you see somebody 24/7, it's just so hard. But in many, many ways, we think that when we, obviously many of you, and including me, I actually took a yoga class on Sunday over Zoom with 7 of my other friends, and there will be more and more of these, but it's really, even in this environment, is not secure enough, right? So there is a lot of compliance and standard that is needed from the school administrator or teacher or learner point of view. There are going to be a lot more system that are going to be created, because I don't know about you, if I'm running a university, I'll be really scared right now, because how do you actually continue to justify, I don't know, like $40,000 or $50,000 a year if you are completely offering this over the internet? So definitely a lot of things need to be rethink, not just the way that we deliver, maybe even for pricing too. Few more of idea is hardware. I think particularly in the US, I have many families in China and Hong Kong. And I don't know about you, but we certainly feel like our hospitals and clinic in the US, and it's definitely very inefficient and expose a lot of inefficiency. And I don't know about you, but I'm fairly frustrated at what's going on now. And in many ways, some of my friends have wanted to donate. But of course, what I also learned something new from my other friends is, even for medical supply, if you want to do donation, you need to get certification. So I think all this delayed, or maybe sometimes ignorant, unfortunately, it may cost, sometimes we're frustrated, but it may cost our lives. So I started to think that, a lot of the supply, is that possible to really kind of think you need to be shipped from somewhere else? Is that possible to, start to print our own masks or medical supply? Is that possible to eliminate? Can we open source certain designs on things that we need and be so similar to sort of the ROS, robot operating systems, and it's mostly a lot of open source. Can we do that with a lot of the hardware or healthcare things that we need? So certainly I think that we have many folks will get a lot more creative to how do you actually sort of bypass certain logistical manufacturing, be able to sort of start producing at home. Actually one more ideas, and then I'm going to go into some of the things that we are doing in terms of helping our companies, and then we'll open up for more conversation. So I don't know if you guys noticed, I really like The Simpsons. I think it's hilarious. We think that there will be new rise of lean retail. There are so many retail physical stores been basically closed down. It's not possible to open for a while. But still, like there are a lot of same things that we need. And I think in terms of new retail, I don't mean just pure delivery. I actually mean the offline to online experience in the China term, the O2O, but it's actually a little bit the other way around. By force, not by choice. Now everybody sit at home. Our offline experience is not online to offline, it's actually back to offline to online. To think about from sales, marketing to customer service, operation all need to move to the cloud. We need to stay lean, stay mobile in an unforeseen future. So how do we do all that? And this is beyond just delivery, right? And think about like, can we even offer some of these personal service, which is in really tough time now. Most of this personal service, haircut, dentist, we can't even, my hair is so long now. I know many of you know me for a long time. I've been short hair now is like this long because I haven't had any haircut for 3 months. And can we do some of these at home, maybe even in a sanitized mobile way of getting it? So I think it would be super interesting if I'm going to create and start a new business. Can I actually empower some of these traditional companies, be able to market, sell, and support the customer really cheaply on the cloud, sort of similar to Amazon, but I think some of these experience actually cannot be offered on Amazon. There will be a completely new set of vertically driven way, more chat, more video, purely online, 24/7, 365 a day. So in some way it could be even more efficient. So some of the industry, just to throw it out there, I'm not saying that you have to do it. It's not going to be easy. Can it be a bar or restaurants? Can it be business services like accounting, which many of you work from home anyway, home services, personal services, auto services, healthcare services, pet services. I think many of these will start, and a lot of people are finding creative way to do it now. So I'm going to end the talk, and then I want to bring our host back in. Last but not least is we many of you know me for the last 5 years being in 500 startups, and mid last year I started a new fund with Alfred Chung, with Phil Chan, and also with Chris McCann, with Proof of Capital. And last week, Chris, my partner, sent out a really, really great article on we need to act now. And we really think that the way that we treat people, doesn't matter our team, our employees, our CEOs, the way we treat them now will create a lifetime of trust and partnership. And so if you go to Chris's article, it's not necessarily on, just about pitching and fundraising. How do you actually pitch during this tough time? You know what, if you're running out of runway, you need to pitch. But more importantly, how do you actually going through some of the nuances instead of thinking through how do you actually take care of business? Because if you're going to come into us and fundraise now, we're going to ask you some really fundamental questions around, hey, how's your finances? Like, how are you looking at your pipeline? Are you reducing your marketing costs? Are you being more efficient or being more realistic in terms of cost of goods sold or the cycle of selling? And we think that everything from overall strategic planning, from sales, marketing, budgeting, fundraising, partnerships, customer service, employees, how do you actually take care of them? All of these, we want to make sure that you are and your teams are well taken care of. So that's why we've been doing a lot of research. We want to do more of it. And so now I'm going to sort of turn the mic back to our host, because I really wanted to hear the question that you guys have.
Thanks, Edith. Thanks very much for sharing. So now we are open for Q&A. So if you guys have any questions, feel free to unmute yourself, or you can type your questions in the channel. Well, I think it's a joke, right? What is, yeah. Well, it is, while we are waiting, can you please share more about your new journey the proof of capital? Like what's your focus and how's your investment strategy different from your past venture capital firm?
I think I love 500. I think I will forever have 500 blood. But with Proof of Capital is a brand new fund. We are a focus on early stages, but also Series A. So our check size, 500 is still doing really, really well. It's continuing to do accelerator deals. And if I last check, it's still 150K for 6%. That investment model is worldwide and like cross industry. And then with Proof of Capital, we're very different now. So as I mentioned earlier, we've been paying a lot more attention, particularly on enterprise, infrastructure, fintech, and a lot of things that is really around sort of the new way of work, education, the way that we communicate. So I found our team, even though we're all at home and I'm seeing them only on Zoom every day, but we've been super busy actually talking to founders worldwide that are more in a very specific enterprise fintech infrastructure space. But we now can write a little bit bigger check size. So definitely want to, continue to do more of that regardless of we're stuck at home or not. And the other day, our partner Alfred sort of joked, you go big or go home, right? But literally we're all going home now. So there's no choice.
Congrats on the new journey. So let's see what kind of questions our audience have. Blaji, I think, are you asking about the coronavirus, the COVID-19? I just want to make sure that I understand your question.
Yeah. Hey, Yifu. Yeah, there was the very first slide had COVID-19, so I thought I was going to learn something. So if it is something else, that's okay. I was curious to know, if there's a new terminology.
Yeah, that's a game for you to catch typo.
Okay, gotcha. Okay, no problem. I think I had another question. There's a question on the chat window. I had a similar question, so I'll wait for you to answer. You're gonna read that, Yifu, the question?
Yeah, so I'm looking through, during the Second World War, manufacturing retooled to support a war effort, which spurred automation, innovation in the manufacturing sector. Do you think we'll see a similar burst with digital innovation post-COVID? I think, so by the way, I think for us, we will be, hopefully we'll be a little bit different because my team and I have been studying what happened to Spanish flu and Second World War and the Great Depression. That whole period literally lasts more than 10 years. I think if it lasted more than 10 years, it's a very, very long time for us to go through. But having said that, now we are many, many years later, and I do think, and in some way, we already starting seeing, actually, I think a couple nights ago, I saw Mayor Gavin Newsom on the news was actually thanking Google, now sort of donating bandwidth to helping to relieve some of the, I guess, we all feel it, like on a daily basis. Sometimes my screen will completely froze. Doesn't matter, like I'm using Zoom or Google Hangout or Whereby or many other things I've been testing. I do think that there are bigger companies on the platform side have already stepped up. Me being in the Bay Area, I'm happy to forward all of you guys. I'm actually on this mailing list where it actually constantly updates all of us on some of the resources, the Facebook, Google of the world, and what exactly are they providing us for free. So there are certain nonprofit they're getting, I think, if I remember correct, don't quote me on it, but I'll send it to you guys afterwards. There's a lot of many resources from Google to Facebook giving free credit and things like that, or bandwidth to help out with the government. These are happening. And I do absolutely think that these things are, so for example, I was really trying very hard to help my friend Maggie to source masks, and I don't know if any of you know, it's actually very hard to source them right now. But I find out that another friend of mine actually have a factory produce some of these material. But what I found out is these factories, even though it's driving distance from San Francisco, they're no longer offering you and me, which is normal people, to actually buy from them at all. All the supply are controlled by the government. So governments are actually reaching out to very specific industry as they see needs. And I think sort of what happened during the World War will happen again, but it's not necessarily that transparent to us. But as we're finding out, this is already happening. Having said that, earlier today, I was talking to a journalist about asking me, hey, you can see certain things so obvious, medical supply or mass or bandwidth, but you also see a lot of company now saying that, wow, like their user base are triple, quadruple, and they're giving away like free minutes, free a lot of different things. And I think that is hard to sustain, even though I'm excited about it. We're seeing new habit is being formed. But at the same time, if this died down, I can tell you a lot of these medical supply would really need it now. Would have still needed it a year from now? Probably not. It's not the same. And I also was reading this article about a long time ago, I forgot the name of the virus, but it was a virus that it was people like open it in the mail. I forget the name. And for a little while, there are what is it called again?
So anthrax.
That's right. And for a while, that was really scary. So you sort of open it up and you may get infected. And there was a couple pharmaceutical company all of a sudden literally get guaranteed government to purchase whatever that they come up with and have huge R&D effort. And then guess what? Like a year later, that particular virus is not threatening anymore. So all of a sudden, the funding dry up, that there's no more consumers. So I think even though there will be some really interesting, innovative automation, digital or healthcare effort that now all of a sudden seems like is the hottest thing, I think as an investor, I'm also being super careful as we are evaluating some of these deals and really think through after the COVID now is a peak out, what was that going to mean to that particular company? Or there's a very, very long answer for Bob's question. All right, I'm just going to read. So it was not clear if Proof of Capital also fund very small early stage team. Would you please throw some info on that? Yes, we are absolutely fund very early stage team from as early as especially if you're in the space of enterprise infrastructure data. We're definitely super interested, or fintech also, very open to ideas. So we're early to A, but yeah, and if you're interested, I'm very easy to find, and I'm sure our host will also send our email address. It's edith@proof.fund, so feel free to send me any information. I'd love to learn more. Does 500 Startup and Proof of Capital invest in early stage companies in India? Absolutely. We've been fairly active. Don't quote me on it, but I think we have so far for 500, not for Proof of Capital, but for Proof of Capital, our existing fund don't have expertise in India, but 500 actually do have partners in India. Happy to get you the name. But I think we've done at least 50 early stage deals in India and have also some early success in terms of exit as well. All right, next question from Kevin. We source 10,000 surgical and 5,000 mass, and we're donating to Maryland Hospital. Oh, thank you so much, Calvin. If you need mass, let me know. Great, so everybody's shipping Calvin. Awesome, Maggie, probably that will be a good name for you to take down. All right, next question. If you had touched upon change in local consumer behavior, where consumer would want to consume things on demand, do you think this will be new normal going forward post-COVID? Personally, I think so. And I want to, without giving out any names, I was just, right before this call, I was catching up with a founder, which they are particular focused on the beauty business. And for a while, none of these big brands wanted to talk to them because it's basically and messaging sort of customer as a actually now is a sales as a service over chat. And for a while, none of these big brands want to even talk to them. But unfortunately, if the way that I look at it is, if you look at a particular industry, of course, I can't wait to go and have, lunch and dinner with my partners physically at a restaurant. I can't wait for that. But at the same time, I think from a traditional business point of view, from luxury goods to beauty brand to any sort of consumer consumption, now they don't have a choice. They will have to build, because right now I can tell you, this company I just talked to, they literally will cold call. A month ago, nobody wants to talk to them. Now the biggest beauty brand are calling them and say, we want to sign up now. And you know why? Because literally their revenue had dropped 80%. So I don't know, if for you and I, longer term, do I still crave for going out and be able to have that shopping experience? Is not purely for necessity. Sometimes it's really for leisure, is an enjoyment. I don't think that hopefully will come back. Otherwise I'll go crazy. But I think in terms of the traditional business, to have forever, really have the sales marketing support to be online, that will not go away, because they will never forget this. And whatever they set up now is here to stay. And not let alone that to ramp up now, we have so many unemployment, to ramp up and bring back all these jobs back will take some time. So what we're going through right now, I think it will at least last for at least 6 months, but that certain behavior will stick. So James, do you invest in Series B round? If we have invested in from early to A, we're happy to follow on B. We're happy to take a look, but we also have found recently, and by the way, just because it also really very varies, B2B and B2C is very different. And again, if you are in certain industry which going crazy, your Series B don't necessarily need any haircut. But we have seen Series B opportunities recently that is almost back down to the Series A valuation, which is very not good for the founder, but we're seeing that. So I would say that this past months, we've been seeing pretty much opportunity in all stages. Also include, not necessarily a good thing for founders per se, also include some of the funds and investors want to sell secondary, because some of the funds are also going through a tough time. Not what founder wants to hear, but this is what's going on now. Yeah, Thomas, yes, we are also, really quick, are you still fundraising? We are, but we're in fairly good shape. I realize I haven't startup coming to the Bay Area from China. So, by the way, we have question, I think, about this group. I'm sure that after this call, we will have follow-up call of the recording, but how do you sign up for future events? So definitely make sure that you're on the mailing list, which I would not know the latest on that. I will have Yifu to answer that.
This is Balaji. Quick questions. Looks like some of the questions are being directed to you in a private chat. Would you mind reading the question?
Yes, absolutely. There are also questions from Karen. Do you look at anything healthcare related? We will look at things that is to facilitate communication between doctors and patients. But proof of capital, unfortunately, I am so not qualified to look at anything sort of pharmaceutical or I love learning about CRISPR-Cas9, but it's just not something that we have the expertise in or be able to help you operationally. So if you're working on sort of on the IT communication system or particular between healthcare workers or healthcare to patients, communication-wise on mobile and all that, we're very, very happy to talk to you. But other than that, like we don't have the expertise. Oh yeah, so Chun have a question is, what company you were talking about, beauty company that you're reaching out to, missed that. That company, we're still talking to them, so I can't really tell you the name yet, but they're definitely doing really, really well. But Chun, yeah, if you wanted to, you can please email me privately, I'll tell you the name. But I will respect that because they told me certain things probably, we can't really share in public. But definitely really interesting trying to look at. All right. So Yifu, there is a question about, is this meeting or this organization looking for new members? Are you looking to screen new startup? Canada from the East Coast.
Well, I just shared the mailing list. If anyone is interested in joining the mailing list about the future updates, I don't know if this is a question the audience asking, or
yeah.
Okay.
Thomas Kwong. I'm guessing Thomas probably dialing in from the East Coast, but yeah, if you are open to members from all over, right?
Well, we have two sets of members definition. One set is our community, which is a large group. Right now it's about 14,000 on subscriber. And also we have on-site what we call co-working space members. So those are for the founders who actually elaborate our co-working space.
That's awesome. Thank you.
Mm-hmm.
All right. Questions from James. So roughly speaking, your criteria to find a startup with valuation less than 50 million, that is correct. I think if it's too late stage, it definitely wouldn't be meaningful for us to get involved, because as our first track is usually from 250K up to $1 million, we're happy to follow on to do much bigger checks, but we do have a equity ownership requirement on our end. Next question from George. Are you working with any remote patient monitoring companies, or is there interest? Yeah, it will be interesting. We haven't looked into many of patient monitoring companies yet, but it definitely sounds like something that is related to sort of a facility communication. We're definitely open to that. So thank you for reaching out. And then Sherry, can you share some thoughts on how early stage startups should manage both finance and the team under such climate? So Sherry, as I mentioned, my partner Chris on the proof.fund blog, our website is proof.fund, proof.fund. On our blog, you will see that the blog post that he posts. And this is actually true for our portfolio company and also for all of you. So if any of you are looking for funding right now, first of all, is unfortunate because now is not a seller market, is really a buyer market, which means that the investors are taking their time, because even though you are at a time where it seems like your user growth, as I mentioned earlier, some of the bigger companies, they have a little bit more reserve. They're pumping, basically giving free service as much as possible because they can afford it. But even that, like, we as investors are questioning, will this stay? 2 weeks, 30 days, 60 days, it's all about the numbers. And we look at the churn. So from a finance point of view, we usually will advise our companies, hey, make sure that you have at least 12 to 18 months of run rate if you have it. And so in the article that Chris wrote, we actually even have really specific guidelines, although, by the way, this does not apply worldwide, right? So there are cases like if you are in Southeast Asia or India, your run rate probably you can afford a lot, but particularly in Silicon Valley, just so expensive. So, but if you are C stage and pre-launch, make sure that you definitely at least, we have like the 50,000, 100K, 200K. It varies based on your pre-launch or your pre-revenue, or you have revenue, but you need to also look at your pipeline may change. Your sales cycle may get a lot longer. But all of these, we need to be super careful about how you're going to run your business. And an investor like us, if you have already been in business for at least a year, we're going to look at all your historical record, look at the finances, kind of think through how do you actually take care of your people at the same time, instead of, I don't know if some of you guys saw the news, Bird, which is the sharing the scooter company, they just lay off over 400 people over Zoom in 2 minutes. That is not the way how you take care of your team. And things like this, we don't want to see that happen in any of our companies, but unfortunately some of them are doing it. So we really want our portfolio companies to communicate as much as possible, because people are getting really nervous sitting at home, and we want to make sure that you take care of them. So there's no one of like, this is the 10 steps, but Sherry, if you look at our blog post, we literally break it down by BD, marketing, sales, HR. How do you, some of the points that you need to think about, those would be super helpful. All right, James asked, do you do safe notes, convertible notes, or equity? We do all three. We are very comfortable with doing safe and convertible, being active investing in early stage. Thank you, George, for subscribe to my Silicon Valley Funding newsletter. I've been running that for 7 years. I still, every Monday, if you want to subscribe, it's silicon.news. We send that out. I send it out every Monday morning at 7 a.m. Balaji, your company invests in startup that is generating revenue, or startup in early stage with great partnership like PayPal. Hey, if you have a PayPal partnership, come talk to us. Love to learn more. I think for early stage companies, and this is sort of the same rule that we do for 500 as well, not just for proof of capital. We know that if you're super early stage, although I do have a little bit different bar, right? So if you're consumer mobile, it's not that hard to launch MVP these days. Like if you have good developers, you can literally launch something over a weekend. So that bar with B2C was a lot higher. So usually I will absolutely ask you, have you launched yet? Yes or no? If you're B2C, you haven't launched, I will wait for you to launch first, because even though, let's say it's only 30 days of numbers, it's still numbers. So in that case, we'll look at MAU, DAU, churn, retention, and all that. But if you're enterprise, early stage, we get it. It takes time. It's longer sales cycle. You may do some proof of concept and has maybe 2 or 3 of these signed partnership that at least demonstrate your ability to sell. I spent 10 years mostly enterprise software, Siebel, Oracle, Autodesk. Sales cycle is long, I get it. And if you have some POC, we're happy to talk to you, because we think that there's at least good sign that your ability to sell. So Balaji, happy to chat. All right, next, Calvin, what are your thoughts on Indonesia startup scene? So I was actually just talking to a couple of my friends, super active investing in Southeast Asia, which including my previous 500 startup with Jurian. I was chatting with Kylie. He's also in Malaysia right now, sheltering in place. And yes, 500 is very active investing in, 500 on the Royal, we invested in Grab, Bukalapak, a whole bunch of Tokopedia. There's all these companies, many of them super active in Indonesia. I think Indonesia is really, really exciting. And many of you know, I spent also many years in China. I think what is happening in Southeast Asia is almost, we can have a lot of these China playbook. We see that in Southeast Asia, and definitely start with Indonesia. So I think in Indonesia startup scene is definitely getting really hot, and many of my friends is very actively investing there. I think for proof of capital, we are very curious, but we are not experts. So I think if you are from that region, very likely I will probably share some of your company information with sort of my previous, with 500, with Monks Hill, with some of these guys where they're just super active there. James also asked, what should your team involve with prop tech? I would guess is property tech, is that correct? That's my guess on a real estate related. We're historically, no, not for proof of capital, but I do have friends who are. So if you are in that space, we're happy to take a look because you never know. But very likely we have a big group of experts that is expert in that area. We usually will invite some of the experts to help us to take a look at that. So yeah, again, just to everyone, my email is, I'm going to send it to everybody. Edith at proof.fund. Feel free to shoot me an email directly. Happy to answer any question that you guys may have if you want to ask privately.
Right, thank you. Thank you very much, Edith, for sharing. See if anyone else gets questions. All right, then we will call it a day. Thank you everyone for joining us. And 2 more things to go. And first is I got a lot of questions asking me the Zoom link. It's actually on your first email once you sign up. So you will have to click view the link once you get the email. But we'll see if next time we can do better to just send the Zoom webinar ID directly to those who sign up. And the second thing is about our next week's episode. I will see if I can share a screen here. All right, so this is about our next week's episode. So we are very honored to invite Spencer Green, who is the investment partner at TSVC. And TSVC is actually the investor of the Zoom. So here you can see his bio and a brief introduction of the TSVC. We will be start promoting a day or 2. And if you guys are interested in joining, feel free to stay tuned. I previously typed down our newsletter subscriber link, and also you can find us on other social media. All right, thank you very much. Thank you, Edith, again.
Thank you. Bye, guys.
Bye, guys.
Bye-bye.
Bye.
Thanks for joining.
Thank you.
Thank you. Bye.